Welcome to TradeTheNBA.com. This is John. This report is for the 19th. Friday the 19th is not so much a thing, but maybe Thursday the 18th was a little bit more because it kind of showed a really the weakness within this setup. We've got a pretty deep move in the shakeout. You're still in negative 14 from a daily. That's pretty significant. But we had this nice dip low of orange underneath green over red and a rising red, though the red being at this depth meant it had problems because until it breaks above the negative 13.5, it's still in weakness. So what we were looking for was any turnaround of orange coming back up and this key meeting point. Now, is it a big deal that we've had this narrow range? No, because typically with that kind of a move that we saw with this big giant candle, you get up to like a 50% retrace. That it took a little bit more than that was interesting, and that it retraced right back to that 67 zone, which was that original positive extreme from back over here in these candles. And neat to see, which is fine. NASDAQ filled in almost all of it. Still, the NASDAQ has green now above, so -5 over science. So even though the orange is over it, it's still suggesting that things are not horrible. Go figure. Now the euro, though, there's some contagion things, and it's growing. More and more concern about what's going to happen with Italy bucking the EU and the potential damage to purchases for Italian bonds and that, because there's no market outside of the ECB buying them, and that could create some risk, particularly with Greece, the whole Turkey situation. There's a lot happening over in the European side that could have an impact on U.S. trade, so it's worth noting. Now, we did have that dip below the red line that was down here that suggested that we would revisit it, and if we do revisit it here and still remain above the red line, that actually could bode for some support for the euro, but nothing at this particular point. And that the TLT heading back down to the top side of the range here at the 113. There's still another range even lower I have for it, right down in the 111. It's just taken a while for it to finally see some action. And oil, nice move back down. I mean, that's going to actually, it won't happen quickly, despite the fact of the rapid decline, because prices are trail quite a bit below. It's amazing how prices will increase immediately with everything, but it takes forever for them to go the opposite direction as inventories for the higher values are cleared and that. So it's all right. It will ease inflationary pressures, and plus the elevated price certainly is going to boost some earnings for several big companies going along the way there. And GLD, it's going to maintain these loftier areas simply because of the innate pressure of inflation. It's out there, starting to be recognized. Now, normally I don't have a chart filled with this many lines and ridiculousness, but I needed to show it because these were the retrace levels from the previous run-up, and some of them hadn't been filled. We had the 97, 84s from before, and the top side of the 86 and that, but there were still quite a few that were left. There aren't any others. This was the last run of them. And so when people are surprised that all of a sudden you start seeing these areas and then they start capturing resistance and support areas, is not a shock to us. I was short from the 2014, 15 area, I think it was. Let me look real quick. The 1475 range. And that was back over here. That was averaged in from the different moves that were up in this area back over here. We came down, covered a few, and then added a little bit more in at the lower 06 range. And then when we had the failure, it was just an immediate boom. Let me zoom that in now that we're... There we go. And we can see, again, these are the beautiful things I like to look for when you get a clean DOC spread like this that has that green breakdown below, a complete rejection of the steel, all happens at once, and you had a reasonable target from a retrace before, but then you have the broader one starting with the 97, 94, and as each of those gets, cleared, you can adjust accordingly. And then when, of course, the orange candle came in here on what was an oversold buy, you would think that you might catch some traction, but look at how fast that orange next bar turns up and says, nope, this long is over, and you got no steel reset to support it, so boom, new lows. We based for a little while, and then you got gold under the 23%, and it immediately went straight to the lows, but then it caught some pretty decent support. You ended up with green over the cyan, and that propelled it to its final exhaustion highs, and then it produced another short snake right at this particular point with the green already below red at that point. Was interesting because you did have red at -2, which that's pretty decent as far as being able to sustain it, but then boom, it breaks down, and within 2 bars before it actually even collapses, you're at that -7 number right here before it breaks down. Let's enlarge this a little bit more. All those lines. So now all these lines can get deleted, and rightfully so. Sometimes I'll leave the ones closest to where price is currently at, just because it gives you a reference sometimes when trading those. But it was really good to see that collapse breakdown. Came all the way through, filled that in, and then you ended up with starting to see the rising, and that's where you started getting like the P2. Well, you don't have that one yet, but you'll soon will. So close to being ready there. And that propelled a nice little modest rally that was pretty much consolidation. You can see the consistency of the red maintaining above that -7.5. It's only when you ended up with clear breakdowns in DOC spread setups, you'd have to wait till right there where you ended up with the orange rising, steel falling, and green below red combination, and that just took you back to the lows, but it immediately caught support and bid from that particular point, and it's pretty much stabilized since then. We're right at the bottom side of the previous resistance one's the 84, 86 right in that area, and we've already seen new series of positive extremes develop from that. In fact, we can borrow one of these and just revisit it right there. I don't think I have snap mode. I do have snap mode on, so it should have gone to the lows. There it is, 70.50. Okay, and extremely close with it right here. Right at 71 within 2 ticks. It's usually pretty close to enough as we get a little bit bigger with our chart, so it makes it easier to identify. But the volume, pretty enormous. This is a pretty big day. I mean, when you have to expand that many times just to get it to broad enough, but I had to shrink that quite a bit just to show the one day. And that expressed volatility, even though people talk about the lack of liquidity. That's just because people are shy in putting their bids and ask in early, and that causes bigger swings. It doesn't change that there's extraordinary volume overall, and that's what we're starting to see. And now at this particular point, we have cyan and steel both under red, and red well above zero. This is still very bullish, even though we're putting in positive extremes that can retrace to it. Your earliest indications right here are exactly what you look for, which is the orange spike, steel having crossed right below cyan, and green crossing with the orange having done that at the same time. So this is the best short configuration within this rally that is popped up. So, and that's just happening at this particular spot right now. So that is the long and the short of it. We've got another great week with some beautiful volatility and just some fantastically clean signals. We really love it when it works out that way. It lets us know that the algos have it under control, and despite what you might hear news-wise, and that this is pretty orderly, and there's nothing to be dramatized about. That there's a little bit of a reduction in some of the bid ask. That's just adding to the volatility, which actually generates more returns, and I don't think it's really impacting them all that much because effectively they got the nice reset, which allowed for some of those claims of a relentless upside market to be kind of thrown into the wind. They've had a little correction, and now things will stabilize based on what's happening with earnings and that, and we'll go off from there. As always, though, trade well, and we'll talk again later. And I will certainly put up any interesting setups that I see on the Skype chat.